Hello, I'm Donald Leggett and welcome to this edition of Share Views, brought to you by London South East. I'm joined in the studio today by Mike Kirk, Executive Chairman of Quadrise Fuels International, who, as you may know, are in the middle of an open offer fundraising right now. Mike, it's lovely to have you in the studio.
It's lovely to be here, Donald. Nice to see you.
Yeah, first time up for Quadrise.
Yes.
So, for those uninitiated,
Yep.
How can there be people who don't know who you are? Explain who Quadrise Fuels International are and what your main product is.
Right. Quadrise Fuels International is a technology and services company servicing primarily the refining and the oil and gas industry. And we offer a proprietary technology that enables refiners to upgrade the bottom of the barrel using a very cheap, modular technology that they can install very rapidly, usually within 9 to 12 months. And it delivers to both the refiner and the consumers significant benefits in terms of delivering a synthetic heavy fuel oil at a lower cost and a higher environmental performance.
So it's all about heavy-duty fuel oil for the shipping industry? For
the shipping and the power industry.
Those are your two big markets.
Those are the two big markets as well. We do have opportunities in the industrial markets and in the upstream oil and gas industry as well, but power and marine are the two main markets that we're focused on.
And MSAR is your special product.
Yes.
So, explain to us in a little bit of detail, in fact, what MSAR actually is and does.
So MSAR stands for multi-phase superfine atomized residue. So what we do is we take the residues that would normally be used in an oil refinery and dilute it down with things like gasoline and diesel. And instead of diluting them with gasoline and diesel, which then have to be sold at a discount to their value, we actually chop those residues up in a colloid mill, mix them with some specialty chemicals supplied by our global partner Nourion, and water. And so that then gives us a very stable heavy fuel oil with those particles kept in a stable emulsion. Because we're not using those expensive diluents, we can actually pass on those savings both to the refiner, who can sell those diluents at a premium, and offer a fuel to those in the marine and the power markets at a discount, together with some significant environmental benefits. And those are principally the addition of the water gives you a much lower NOx production when it's burnt, and because the fuel is actually pre-atomized, it's almost completely combusting, so you get virtually no black soot, and you actually get also almost complete combustion as well. So there are benefits there to both the producers of the fuels and the consumers of the fuels. Is
it too simplistic to say that it gives you lower sulfur content fuel oil?
The sulfur content is going to be determined by the residue. So we can produce low sulfur content, but that's determined by the sulfur content of the residue. And we think there's more value for us and for our customers in actually producing high sulfur fuels that actually can then be used with appropriate abatement technology to take the sulfur out of the exhaust gases.
Right, I hope everyone's listening very carefully here, because this is quite complicated.
Yeah.
2018, you said at your AGM that 2018 was quite a challenging year.
Yeah.
In what way was it a challenging year, and what are the answers to those challenges?
I guess there were two principal things. One was we went into 2018 on the expectation we were going to start a major commercial scale project in Saudi Arabia, supplying MSAR into a major combustion trial in Saudi Arabia. Unfortunately, our partners weren't able to deliver on what they promised they would do. So in around March, April of this year, we had to indicate that that project was actually going to be put on hold. We then had to go through a process of looking at what was our strategy for developing the business. We'd had one or two very large projects. So during the year, we undertook a review. We've now got a strategy where we're looking at a larger number of smaller projects, though some of them are still very significant, so that we can actually get to a position during 2019 of demonstrating to shareholders that we can move from some of the successes we've had in terms of getting MOUs with a number of partners to actually delivering those into commercial contracts and early stage commercial contracts and trial contracts as well in both the marine and the power industry. And that's what we're actually focused on delivering during 2019 now.
That's interesting. One of the big questions from the private retail shareholder's perspective is how do you guys actually translate those MOUs, those memorandums of understanding, and all those interesting agreements you've got with all, working partnerships you've got with lots of different people? How do you actually translate that into revenues, into definable revenues which are adding to the bottom line?
Yeah, I'll give you an example of the sort of timescales that we'd typically be looking at, and I think actually, albeit that the outcome wasn't exactly as we'd wanted, we actually started the project with Cepsa and Maersk, and we signed contracts in the September of 2015, and by June 2016, we'd done all the engineering. We'd actually installed the facility at Cepsa's refinery in Spain, and we were producing MSAR on a regular basis. So that 9-month period from signing a contract to us producing fuel at commercial scale gives you an idea of what it can be if we actually get things moving properly.
And it gave you an idea of what it can be as well, I'm hearing.
Particularly,
you proved yourselves, if not to anybody else.
Yeah, and actually, if you've got a committed party on both sides, that's what you can deliver on. And certainly what we're looking during 2019 is to ensure that we had a number of some really positive outcomes during 2018. Right at the back end, we had a confirmation that we were doing some further work with Freepoint Commodities, who we'd signed an MOU with in July of last year. We announced in very end of November that we'd actually done some further work around that, and we're doing a co-marketing and project development agreement with them. So we've already moved that on from an MOU to a more definitive agreement that we're using then to develop particular projects.
It might be useful for the audience to work out, well, you've taken it so far with Freepoint. What are the next steps?
The next steps with Freepoint would be, we've identified and we're working with them on specific projects that we're looking at in particular regions and countries. We've got an agreed format with them as to how we prioritise those, and we're looking to develop those opportunities and really look at something where it enables us to use our strengths and actually use the strengths that Freepoint bring to that, which are predominantly, I guess, 2 or 3 things. One is their access to finance. 2 is they're an established player in the liquid fuels markets. And 2, they've got great relationships in a number of regions that we're looking to build our business in. That, together with our proprietary technology and our proven project development and execution expertise, gives us a high degree of confidence that we can deliver at least one of those projects during the course of 2019, primarily with someone like a Freepoint, but we'll continue to look at opportunities on our own and with a number of other parties as well. And I think one of the really exciting things for us and hopefully for our shareholders that we think Freepoint enables us to do is move to a different mode of operation at an earlier stage in our development. Traditionally, we'd have been looking at using what we would term the license mode of operation. So we would just offer a license to a particular customer to use our technology to produce MSAR fuel. We'd then work with them as well to actually look at customers for the use of that fuel. What we're looking to do, and primarily this is driven by both ourselves and Freepoint, we want to do what's called build, own, operate. So instead of actually working and providing a license to a customer, we'll go to a refiner collectively, we'll buy the residue from them, and we'll find consumers in the marine and the power markets and sell the fuel to them as well. That enables us to actually take more margin in that process. It takes more investment as well, but we believe a combination of either investment directly from Freepoint or at that time when we've got effectively back-to-back contracts, we can actually look at doing that investment ourselves through structured finance and debt potentially, not just having to rely on the equity markets.
I need to stop you there and say, okay, that's all well and good, but what happened with Maersk? You were having all that great relationship that you're having with Freepoint, you were having with Maersk.
Yes.
What happened?
I guess there were 2 things there. One is if we look at when we started discussions with Maersk, that was back in 2015. We then did the work at Cepsa to get the fuel produced up to July, August 2016. The discussions then with the IMO took place in October of 2016. And the expectation from most in the industry was that they were actually going to go for putting IMO 2020 actually in 2025.
No.
So the expectation was there was going to be a 2025 deadline, not a 2020.
Lord.
when that came out, it was a real shock to the industry. And actually, I think what we found, why things changed for us in many ways very positively during 2018, because that was such a shock. During 2016, from October onwards, and during a lot of 2017, the industry was pretty much sort of sideswiped.
Tell me what IMO 2020 is in your own words. I've got it written down here. You tell me in your own words.
IMO 2020 is what is going to be used for shipping basically outside of coastal waters. Currently, ships can actually use fuel which has got a maximum of 3.5% sulfur content. From 1st of January 2020, it will be 0.5% sulfur content. And to put that in context, there are already a number of areas called ECAs, environmental control areas, and a good examples are the North Sea, the English Channel, and the east and west coast of the United States, where already that's actually been reduced to 0.1% sulfur. So we're already seeing this as a gradual thing that's happening in a number of areas. But predominantly what it's doing is giving a really major dislocation in the fuel oil markets.
And the industry does seem to be challenged. It's looking for all sorts of solutions. It doesn't appear to find any one magic. There's no silver bullet.
There's no silver bullet.
They're trying all sorts of different things.
They're looking at a number of things. I think the thing that's changed really significantly during 2018, though, is there are two principal routes for people in the marine industry. One is they can actually use low sulfur fuel, and the other is they can actually use high sulfur fuel and put what are called scrubbers on board.
But I do know there's not enough low sulfur fuel to go around.
Yeah, so
which makes me smile. But hey,
there are a couple of things that came out. So when they were looking at the work surrounding the IMO 2020 decision, what they looked at is globally there is enough low sulfur fuel available. What they didn't take into account is, unfortunately, a number of those sources you can't mix together. And so whilst globally that is an appropriate decision, at a macro level, what you find is that there are likely to be some issues surrounding, one, availability of low sulfur fuel, and two, its quality. The other area is that it's having a really marked impact, not just on the marine sector, but the global heavy fuel oil market, because it's making that premium between low sulfur distillate fuels and heavy fuel oil expand. And that to us is really good for our business. And we think it's really good for MSAR consumers because they get to benefit from that very wide spread. And to put that in context, that spread could add, for example, to Maersk's fuel bill around $2.5 billion a year in additional fuel costs. So it's really significant.
Wow. So anyway, all that is extraordinary. So 2018 has been an amazing year.
Yeah.
So why are you so positive about 2019?
I think on the back of what we were able to achieve with Freepoint, which we started off discussions with them earlier during 2018, we signed the sort of MOU with them in July. We then worked with them during the course of that year, and by the end of November, we got to a position of having this collaboration and marketing and project development agreement. So we've already shown there that we can actually work with a partner that really sees value in us, we see value in them, who can actually effectively act as our eyes and ears in the marketplace much more effectively than we can as a small company. And we're very well aligned in terms of what we want to achieve, which is we want to create opportunities to manufacture and use MSAR fuel in the heavy fuel oil markets. And they're in a great position to work collaboratively with us to achieve that.
I must ask you about your open offer. Your open offer ends when? Is it this Friday?
It's this Friday. We're looking to raise around £2 million. And as we said we had a conference call about a week after we announced the open offer. We'd had discussions with a number of our major shareholders. They remained supportive of us. We've had a long-term relationship with a group of shareholders who hold about 30% of the company. They're wealthy private individuals that have been in there since, actually in some cases prior to flotation. They understand the business well. They understand what we're doing in terms of taking the company in a slightly different direction to achieve our objectives, and they're very supportive of that. Okay, so they're supportive of the new strategy. Do you have any institutions in there? We've got some small holdings by institutions, none above a disclosable level, so none above 3%, but there have been a number of institutions that we've we continue to talk to that have got investments in the business, and I had meetings with a number of those immediately prior to the AGM last year. They remain supportive, and we hope that they're going to be contributing positively to the open offer.
So there's a substantial free float, and the private retail investor is pretty important here.
It is, and it's important in two ways. One, they've always been a significant supporter and investor in the business, and two, when we looked historically at making offers for further equity investment, we were also mindful that traditionally going through a normal placement, that obviously doesn't enable most private investors to be able to participate. So we'd always really had a very good understanding that we'd said to our retail shareholders that if we did look to participate in an equity fundraising, we always make sure that they would have the opportunity to participate in the same way as any other shareholder would as well.
It's a really tricky thing for them, though, because at the moment the share price is under the price of the open offer price.
It is.
So what's your advice to them? What do you want your private retail investors to do?
I think a very good thing that came out, because obviously I can't give financial advice to our
Clearly
investors.
Not.
But
I didn't mean it in that sense.
No, but I think one of the things that that came out during this conference call was that, and if you look, I guess there are a couple of things. One is the discount isn't quite as big if you look at what it is versus the sort of offer price for the stock versus the middle market price. But the other thing that was actually said on a conference call by one of our investors was, if you're looking at maybe a 0.1p difference in the share price for you buying in the open market versus buying in the open offer, that really pales into insignificance if, for whatever reason, the company doesn't get the support it requires for the open offer. And therefore, you're actually looking at something which actually potentially is value destroying for you and the company versus value additive by participating in the open offer.
Okay, so what are the ramifications of you not being able to raise your £2 million?
If we don't raise £2 million, and what we indicated, if we raise £2 million, that will take us through to October of this year. If we don't raise the full amount, that will take us through to a period between, let's say, the summer and October. We still think that would give us time to actually deliver on a lot of our opportunities during the current year, and we would be coming back to our shareholders with a view as to how we're going to take that forward.
And that's it for now. Thanks to Mike Kirk, Executive Chairman of Quadrise Fuels International, for joining us. And for more interviews like this one, please subscribe to the London South East YouTube channel. Thank you for joining us. Bye-bye.